How about the lack of volatility that we had seen for how many months would you say?
It was abnormal. The S&P realized vol for the better part of 2-3 months was under 8%. So yeah, it was very, very quiet market.
What did you attribute that to?
Solid economy, accommodative Fed. People need to be long assets.
Even though the Fed has been less accommodative, it was still.
There's worry about that now, but the things that I saw, first and foremost, the big bullet points are people get caught off sides over the last couple of days. I expect the VIX to fall back to the 16 to 17 range. This was purely a tactical sort of trading market. We saw risk parity managers liquidate due to the increased volatility in both rates and equities. Those are the same managers that'll be back in the market buying it next week as volatility falls. Rate concerns, velocity of rates is the question that everybody seemed to want to talk about this last week and question their assumptions. And if you look at Eurodollar futures and you look at forward rate volatility, we're just not seeing that priced in markets right now. So we think the market got a little bit ahead of itself in terms of those assumptions. Selling begot more selling, and VIX spiked, and we're going to see it come in next week.
So does the actual volatility we're seeing, is it commensurate with the way we cover it, do you think? Because at 5% in 2 days is not a lot. I mean,
this is not a huge move. I wouldn't say that.
But is it volatile now? I mean, it was volatile yesterday. We were down 300, up 300.
The market, participants clearly got caught with unexpected.
But they're 2% swing. They're 2% swings. I mean, we remember what real volatility is. Shouldn't we get used to 1,000 points?
The issue is when you look at the underlying structure of the market that we've all talked about a lot is there are not real buyers and sellers in these markets when we get a bigger move. They're very tactical buyers and sellers. It's electronic, and that bid or that offer in the market will dissipate very, very quickly. So, you know, as we saw yesterday, we got a little gappy as we started to move to the downside. And that's simply machines get turned off and it can get a little hairy. But when we look at the underlying fundamentals, my partners at Variant Perception will point out with their leading indicators, things have turned slightly, but we're just a little bit less bullish.
What do you mean the machines were turned off? Because there's this theory out there the machines were turned on, and that adds to the volatility. Is the chasing the direction?
Right. The bid is turned off, you know. Yeah. The bid is turned off. And to your point, the sellers are accelerated, right? They feel like they've got a little room to run, so they'll come in and push it, and the bids fall off. But economically, we seem to be in pretty good shape. The bank announcements, the earnings announcement this morning will be very, very important for the market. Look at CPI data that we got yesterday. I think that really started to make people question, you know, are rates really going to move as fast as the market's talking about?
It was less inflation than had been anticipated for 2 days running with CPI.
Exactly. But keep an eye on Eurodollar futures forward rate markets. They're not pricing the fear in that people seem to be discussing.